Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin. Dennis Dick, I think he threw his back out or something. So he is getting that looked at. So it'll just be Joel and I in the driver's seats this morning. But we have some news on our radar. We're going to talk about some earnings, CarMax, BlackBerry, AutoZone. We have Cintas and Nike after the close today. A nice setup in U.S. Steel. Netflix, if you can believe it, is red for the year. We'll talk about that. Talk about American Express adding to their buyback and increasing their dividend. We'll take your questions from our chat, and we'll be joined by Nick Chahine at 8:35 and potentially a surprise guest at 8:50. We will see about that. But Joel, what's the word here in the overnight trading session?
And Dennis calls me an old man.
Yeah.
And he makes fun of me all the time. You don't hear me like having back issues and things like that. No, Triple D, I hope you're listening in the waiting room there and you're doing good. We're green. We're green once again here, Spencer, by 10 handles at 3,007. We caught a bid late in the day yesterday, continued the 45 minutes up to 5 o'clock, continued at the 6 p.m. open, went to 12 and a quarter. Have nothing up there for you, folks. 1375 has been the high of the rebound. I'll just use an intermediate target at 3,018. That's Friday's high. As far as support goes, we're hanging mid-range on the session, so I'd like to see us hang in here. Pre-market low, 0075, but if they take us back down to the close, that close is way down at 97 even. So that's a good 10 handles away. Crude in the red by 66 cents at 57.98. I'm thinking if crude can't rally now, I don't know if it's ever going to rally here. Holding on to that support at 57.37. If not, you get into the gap area. You have gold in the red by 290 at 1528.60. Silver in the red by a little over a dime here at 1881. Bitcoin just hanging out here, down $85 at 9,720.
All right, Joel, let's start with Overstock today because what a move that had yesterday. What a move.
All right, we talked about the news yesterday, just down, straight down. Didn't quite get into Friday's range that we were looking at. Friday's high was 1487, the low 1452. Talking about the gap theory, folks, when the stock gaps down, if anybody out there in either chat does not understand what I'm talking about, please speak up and I'll go into it in a little bit more detail. Closed near the lows of the session, 11.19, getting a 33-cent bounce this morning. Let's see if buyers emerge at that $11 level. I will just alert you that we were under $10 here, I believe, a few months ago. Yeah, you had a few monthly lows under $10, right about the $9 area. So that's your super extra major support. $2 away from it. I don't think we'll hit it today.
They just flushed everyone out, though. I mean, it was bad news, but you know what? It's always interesting to see just how much buying or selling pressure starts at the open, right? Because it was down big in the pre-market, and you're not quite sure are they gonna hit it, are they gonna lift it once the real money comes in, and they crushed it.
Well, think about it. Think about everyone there's a lot of people caught long this thing, right? We traded up to 29.75 on September 13th, right? And here you are at at the time we were opening at 14. So you have two factors going in. One, anybody that's long is like choking. Okay. Secondly, you get these ARBs or not the ARBs, but the high frequency traders going, right? And they know people are long and they are sniffing out big sell orders and they could care less, Spencer, that you're long at $25. They're just going to pepper that thing until they exhaust the sellers. And it looks like there were sellers all day here. So there's two factors. One, longs thrown in the towel. Second, aggressive short sellers out there. And yes, in this great bull market, there still are people out there making money on the short side.
And I just saw that they filed for a mixed shelf offering.
Oh,
So-
really? You got to be kidding me.
People are stuck. You just said it yourself.
The old, oh man, oh gosh, that's crazy. Is
Yeah.
there? I don't know.
No size or terms disclosed that I've seen.
Yeah, well, whatever price that comes out to, that will be the stickling price. But I don't know. Hard to stomach buying that stuff. Where would you buy it? Where would you buy it?
I wouldn't.
Man,
That's the answer. I've never even been to overstock.com. Have you? It's an e-commerce site. I've never even been there.
are they furniture or is that Wayfair?
It's like, as I understand it, it's like Amazon, but not as good. Yeah, you know what? I'm gonna go there right now for the first time.
Okay, let's do it. Can you pull it up on the screen?
It's furniture. It's furniture and apparel, jewelry. They've got outdoor stuff. I'm just looking on my laptop.
I remember talking with Kolb about this one about a year ago. Yeah, maybe a year ago. And I remember he traded it short. And I wish he never would have covered. I think he eventually covered here. But I don't know. I was probably short at 50, 60, 70, and 80 on the way up, too. So it's not really a big deal when you make a call when it goes 80, 70, 60, 50, 40, 30, 20, and down to 10. But yeah, and Lombardo 141 says, as Dennis will say, I'll buy it for a penny. Well, you may be seeing it there someday. What you got overstock up?
Well, I just had the on my laptop. I had the webpage.
Oh, you didn't show? Okay.
What about Netflix here though? This is surprising. Netflix is red for the year. Joel hasn't had a down year since 2014. They are down now for 2019.
And we've had some people on the show. I mean, Michael Pachter from Wedbush has been bearish for a while, but I do remember having Anne Marie on. Anne Marie will be on tomorrow. I know she was giving us some bearish setups on there, and I know you guys. Mr. Chaikin's timing is not always perfect, but I know Mr. Chaikin has been negative on this one. A lot of competition. I mean, there's so much streaming competition out there. They're $7. Apple undercut them. I tell you, I really don't know the whole future of TV because I don't watch that much TV. The TV I watch is really Michigan football, and that's kind of hard to watch. So I don't know. I mean, how much time do you spend watching like on your phone and all these different devices? Comcast comes in there, Facebook with the portal. Ton of competition coming in. Things are looking bleak here. We're trading down again 52 cents. Big level to keep an eye on. 256.58. That's your low for the year, folks. So if you're looking for a target on the downside, the low from yesterday, 61.89. So there you go. There's your target, 256.58 in Netflix.
And this morning you get a couple analysts. Pivotal's playing catch up here. They're maintaining their buy, but they're lowering their price target to 350. So I don't know if we're gonna hit that in a year, but that's Pivotal's price.
Yeah, that's his pound. Isn't Pivotal? Boy, they're being a little. Did they pull the rug out from under Roku too? Who was it to pull the rug out?
Yeah, that was Pivotal.
Really? Do we know? Yeah, do we know?
Yeah, that was. I don't know if I would assume it's the same analyst, but that was.
Take a look.
Wait,
Peter?
Hold on.
I think it is.
Was it? What was it? Was it Pivotal? Let me look here. Yeah, it was Pivotal. It was Pivotal.
Was it Peter C?
I don't know. The analyst, I don't know who the analyst was. But
doesn't it say there in Pro?
Not always.
Okay.
So
sneaky.
Yeah. So Pivotal maintaining their buy, lowering their price target on Netflix this morning. Wells Fargo is also initiating Netflix with a neutral or market perform rating, giving it a $288 price target. So
what do you do? So with this 350 target now, it already hit 350. Am I supposed to?
Yeah, I don't.
Did it already hit its target and it's going down?
I guess.
Or do I buy it now and sell it at 350?
Yeah, I guess the latter is what they're saying.
No way.
I mean, I don't know.
No.
But their price target was here. It was 515. Yeah, just to show you how out of whack the price target was with reality. So
Yeah,
maybe don't follow the pivotal analyst for their Netflix calls.
sure.
But we have a couple earnings I want to get to, and I want to start with BlackBerry here. It is on the top of my loser board this morning. BB Q2 EPS 0 cents. That actually beat by a penny. They're supposed to lose 1 cent per share. Sales 261 versus 265 $million, so a slight miss on that. And the stock is down 10%.
Is the U.S. government still using BlackBerry? Remember, they were
Yeah.
during the.
Yeah, I don't know, but
Yeah,
I remember that was like that's one of the surviving narratives of 9/11 is that on 9/11 all the networks went down, but BlackBerry's network stayed up, and that's how the government officials were able to talk to each other because of BlackBerry.
Really, that's a good story. Well, not a good story, but
Well,
they got whacked. I mean, they took it straight down. Sellers just came in, took it all the way down. Your panic low comes in at 640. You got a little bit of a rebound to $7. I'm looking at this 640 area. Spencer, let's go to the dailies here. And I guess the low of the move was made in September at we have some other lows here in August. Let me go to the monthly and give you a good level here. 657 was your low in December. You got near that area. Pretty big move here. So you're a little bit off it. I don't know, 650 to 660 as support here to possibly cover short. Not looking quite yet to go long yet in the issue.
that monthly chart is crazy.
Is that crazy?
Don't you remember? Do you remember BlackBerry? I remember it seemed like one day everybody owned a BlackBerry, and then the very next day nobody had a BlackBerry. Do you remember that? Do you get
I
that?
had one. Did you ever have one?
No, I didn't. But I feel like maybe once the iPhone came out, I don't know. But because it was around that time, 08, 09. Also, the recession didn't help. But yeah, everyone I knew had a BlackBerry one day, and then next thing I know, nobody had BlackBerries. It was crazy.
You know, I had a BlackBerry and then I got an iPhone. I think I told this, and I just couldn't figure it out, and no one else in my family have it. So I returned it and I got the BlackBerry. I kept it for another couple years. And then my girls got the iPhone. And I'm like, so after they got it, they taught me how to use it and stuff. So I'm probably the only person that returned an Apple iPhone for a BlackBerry.
You might
Yeah.
be. You just might
Yeah.
be.
Don't know what to say to shareholders of this stock. I mean, it's
Yeah.
been in a world of hurt.
All right, CarMax here, KMX Q2 EPS $1.40 versus $1.33 estimate. Sales 5.2 versus $5.06 billion. So beat on the top line and beat on the bottom line for CarMax in the second quarter.
People buying used cars. I mean,
Yes.
is that the story instead
Yeah.
of new cars?
They're-
I mean, that's the only thing I can.
and they're getting them financed. I don't know.
Yeah. You've had a couple pops over 91, just quick pops. They've been snuffed out. Not major league, but just seller here. It looks like he wants out over 91. We'll see what that happens. All-time high in the issue, 92.01. So maybe someone's looking for that area. So $1.70 away, faded in the 91 handle a few times. If you're looking for a nice juicy target here, I'd say 92.01, the all-time high from July in CarMax. And whenever I think of CarMax, don't you think of the stuff that you put on your lips instead of the car company?
What? No.
You don't?
No, I don't think of that. No.
I do.
All right. We had our AutoZone is scheduled. I don't know if they're out yet. Same with Jabil Circuits and Neo. I haven't looked for Neo. Is Neo out? Neo.
Yeah, it must be.
Neo is. Oh yeah, Neo is out. Whoa, this is funny. Well, not funny actually. They canceled their earnings conference call. Wow. Oh my goodness. Okay. I don't know if I've ever seen that before. So Neo reported a Q2 loss of 45 cents per ADS per share. versus an 18-cent loss estimate. Revenue was at 219 versus $184 million. Their Q3 revenue guidance was extremely light. It was so bad. So the guidance was at $558 million. That was a Q3 revenue, or that was the estimate. Q3 revenue estimate, 558. The guidance was 232 to 242. So they by half. That's what they guided versus the estimate. So this was really, really bad. They're laying off employees. They're reducing their headcount by like 8,000 people. They canceled the conference call. Like I said, this is bad. This is really bad here.
Do you guys, if you guys want to do an article here, how about the 60 minutes?
I knew you were going to say that. I knew you were going to say that.
Yeah. Boy, oh boy. The 60 Minutes asked me to come on a couple of weeks ago, but I just didn't want to put a top in the show coverage, so I didn't come on.
Probably smart.
Yeah, I mean, where was that? I think that hit 11, 12. I think that was right around the all-time high. I think that was right around. Could you check it real quick? Was that?
It was in February. It was late February.
All-time high in February, 1064. And then in March, it bumped 1063. I wonder if they're going to do a follow-up story there.
Oh, I wonder.
On 60 Minutes. What can you say about this stock? You're hitting the lows at 217, and someone's buying it. Probably someone that's shorts, bringing it in here a little bit, but really not bouncing off here. The all-time low in the issue, 235. So if you want to hold out, man, oh man, we are right there. I don't even know what to say about this stock. It's horrible. I can't say it's going under because I don't know enough about their cash or their cars or whatever they're producing. But an IPO that's just gone south and looks like it's going to be making a new all-time low today.
Yeah, we talked about this yesterday. Bubbles pop, and this is yet another example of the 60 Minutes indicator working, right? When you see a company or a stock featured on 60 Minutes, it is almost always at or near the top. That's just
or bottom. It's a contraindicator. Yeah, right?
Okay. Do you have an example of the bottom?
No.
I think about this. I think about when they had the Impossible Burger guys on a few months ago. I'm sure there are others that
I don't know about Lumber Liquidator. They had Whitney on after after the Lumber Liquidators thing, and I mean that's kind of tough. I mean they probably, I think they would try and shy away from stock market and stock picking.
Well, they don't do that, but they cover they feature and they feature companies and they do investigative work, and that takes time. But it's a mainstream indicator is what it is, right? That's mainstream news. That's not Wall Street news. That's mainstream news.
There was a guy that I think he passed away. I think it was Paul McCrae Montgomery. And he used to do it. Someone correct me if I'm wrong here. I think he used to do that with Time magazine covers and with fashions. And I don't know. I think he did pass away, but it just kind of like when something hits Time magazine, the cover, boom, kind of go the other way.
60 Minutes, I think they do great work, but it's a contraindicator for the market or for a company when they're featured on that big a mainstream platform. American Express. Back to the buyback and dividend train here. They are reporting a 120 million share buyback and raising their dividend from 39 cents to 43 cents a share.
It's gotten a little pop off this up 41 cents. Muted reaction. I mean, market is trading up, so I don't even know if it's really helped it beyond where the market is trading. I can't. Resistance, I'd say major resistance. I see it, in the 121 handle, still $3 away, but the support is easier to identify here. You did do a little undercut yesterday at 116.10. That's low. That looks to be like your major support. Some big buying going on there. And we've also been in the trading range here for almost a month between that 116.5 area and 121. So let it chop around in this area and go with it if it breaks out of over the 121 or breaks down below 116.
All right, Joel, what about the setup here in U.S. Steel that we talked about yesterday?
Well, Dennis called it a little bit late to the party. I wasn't paying attention to it. I mean, I looked at the 6 out of the last 7 analyst moves in U.S. Steel has been downgrades. The other one was a price target reduction. So a lot of negativity here. The only reason I like to bringing it up is you had a low of the move at 1017. And then yesterday off the open, they take it down to 10, or the low of the move was 1016. They took it to 1017, boom, rebounded, closed over $11. I'm not going to say it's out of the woods here until you clear like 1135, 1140. That's your 4-day high. But that's just the other reason I wanted to point that out is just I'm using analysts, all analysts ganging up on a stock sometimes for a turn in the stock. But you would have to be a real contrarian on that one. I think what happens is you have people that have shorts in the market to try the cover, the algo sniff out the buyers, and then maybe some real buyers came in. But just a nice move that adds emphasis to that multi-year low at 1016.
Speaking of analysts getting up on a stock, analysts are getting up on Snapchat here in a good way. We've now got the 3rd upgrade of Snapchat of the month. We had Evercore on the 3rd, Susquehanna on the 17th, and this morning Guggenheim is upgrading Snap to buy, announcing a $22 price target.
Can I ask a real dumb question?
Please.
And I know they're different, but what's the major difference between Snapchat and Instagram?
They're not that different.
Really?
The difference is Facebook tried to buy Snapchat, and when Snapchat said no, Facebook said, okay, we'll just copy all your features on Instagram. The biggest difference was that Snapchat's photos auto delete, right? They're not permanent. Okay. And Instagram's are. But aside from that, Facebook has essentially copied most of Instagram's features, and they even copied that feature as well. So they're really not that different. It's a matter of personal preference.
Okay.
That's the answer to your question. Facebook tried to buy Snapchat. They said thanks, but no thanks. They said, okay, we're just going to copy all your features onto Instagram. So that's it.
Okay, so I guess I wasn't that
nope, not that far.
As you guys can tell, I use neither. Nice move up here. The analysts are helping this thing get off the mat. Boom, trading up. Gosh, you just got to keep it. 17.55 up 43 cents. A pre-market high comes in at 17.66. If I was long this thing, I'd like to see it get up to 18. 18.36 was a high. The prior day high was 18. Another day's high at 18.12. So there's a seller there between, over 18. They knocked it down pretty good off there. So if you just want to be patient in this one, wait for it to get up to 18, see if it can clear 18. It's had a big run, though, from 15. So I don't know if it will get there today, but looking for another major leg up in this one. I'd say 3 closes over 18.50 and you get another leg. But that was about that's a buck away.
I'm looking at this weekly chart, and this is just kind of baffling. What would you do here
in Snapchat?
Yeah.
I
mean,
I'll tell you.
I can convince myself in either direction.
That's you're bringing up a good point here. Let's call the all-time high in this 30 and the all-time low 25-point move, 12.5. Man, 12.5 and 5 is 17.5. You're right here right now. I mean, just because the market's giving me 18 as a number, for me to prove that this is another leg up in this stock, I'd wait 3, 4, 5 days to see if it's trading at 18.25. And then it will say, okay, it's cleared the 50% retracement, and we're going higher. But man, oh man, it just, you had the huge decline off the IPO. You're getting back to mid-range. I don't know how their numbers have been lately, but you could figure. I know
they were good, but I don't think they were this good. They were okay. They were better than expected last quarter, but I don't know if they were really.
But don't they make their money off the advertising, right?
Yes.
Isn't that the way they do it?
Yes.
So I mean, I
It's the same as Facebook and Twitter. It's ads. It's
yeah.
all
So they all want to fight for that and the ad revenue and the returns on that. I have no idea where all that stuff is going. And I'm a really poor example because I'm not on Snapchat or Instagram. So if they can increase their ad revenue, if they have an edge in that category, then yeah, it's gonna continue to go higher. If they don't have an edge in the in the ad portal, that's then it will sink back down. But I mean, never took advertising when I was in college.
All right, we just got Jable Circuit's earnings, or Jable. I'm gonna call it Jable Circuit. Jable's earnings report a couple minutes ago here. Q4 EPS on JBL 88 cents versus 86 cents. Sales missed slightly, 6.57 versus $6.61 billion. So a mixed Q4 report, EPS beat, sales miss, and the full year EPS guidance was in line. The full year sales guidance was also in line, and they're doing a $600 million buyback.
Someone got real excited, took it up to 32.65. Someone got really unhinged and took it down to 30 even. So your early crazy price discovery is in. We are in the green as we speak right now by 45 cents. And I'll just give you 32, 33, 32.40. That were the highs of the move on 9/11 and 9/12. Let's see what the close was on those days. 31 high close for the move is 32.36, trading at $32 right now. So right there, give yourself a little bit more room here. Let it get through 32.50, dime above those highs, and then another leg up higher here. And longer term, who liked this stock? Do you remember who was on the show to like this stock?
I have no.
It might have been Sean. It might have been Sean, but
that would have been my guess. But
he likes a lot of stocks.
Yeah,
but also Spencer, just go to the monthly here because going back to 06 here before the financial crisis, you had a high of 31.26 here, and I mean, if you want to be like a bullish monthly trader here, it looks like another leg here, a breakout to the upside in Jabel Circuit.
All right. There were a couple of ratings I wanted to get to, and then if we have time, I want to do some chat questions because we do have two guests. We have Nick at 8:35, and then we're going to be joined at 8:50 by Nate Tobick from CompleteBankData.com to talk about the Fed's repo madness here. So a few more minutes, and I want to get through these ratings and then get to some stuff before Nick. So we have WYNN getting a big upgrade this morning from Goldman Sachs to buy. WYNN Resorts. We have not talked about this as much as we used to, I feel like.
Goldman Sachs. Well, you don't want to be standing in front of Goldman Sachs here.
I wouldn't.
Boom. Trading up in the pre-market here, up $3.59, right at the highs of the pre-market session, 111.89. You're going to probably have some shorts scrambling on this one because you hit 120. And then all of a sudden you're back at 108. You're looking for the lows of the move here. Let's see if we got any daily highs here. If you just want if you're just a medium range trader, you're looking for some targets here, not looking for the home run. 112.48, 113.75. You could just go look at those daily highs from 3, 4, 5, and 6 days ago, 7 days ago, breaking this trend of lower highs. So Goldman Sachs giving it a boost. I think if you want to be a long-term trader and say, the stock's been a pig ever since Stephen had those, they were more than allegations, right? They were.
Well, he got forced out of the company.
Yeah, he got busted on that one. 120 is your major area long term in this one to hurdle to get back and work in some of those red bars back from August. Boy, this stock is volatile. But look at your short term targets: 12.48, 13.75.
All right. Zscaler also had an upgrade this morning. ZS Berenberg upgrading them to buy.
Berenberg, they're waiting on this one. Zscaler hanging out at the lows of the move, got whacked on earnings, buck up a $1.01. I don't mind this call. The reason I don't mind this call is because you have an area to lean on at 47.28. So if you're looking for any kind of this move to be retraced, you're risking $5. That's not a whole heck of a lot of money. If you're looking for 10, 15, or 20 points, my area of interest, my major area of interest is 53.15. And the reason is that's the highest it's been since that debacle earnings day. So once you get over 53.15, folks, things open up to those gap areas. Gaps are just not filled immediately, but 60.03 would fill the gap. And I'm not sure if this is going to be a stamp. Where's stamp? We're looking for that one. Get back to fill its gap. Well, it had two huge gaps, but
which one?
Yeah, the second one. The first one, I don't know if that will ever be filled, but the second one to fill up to 82.61.
And then in Atlantic Equities making a call this morning on Ralph Lauren. I'm going to assume it's a valuation call. They're upgrading Ralph Lauren to overweight.
Oof, man, this thing's a mover. Up 327 at 96 even. Just spotty trades here. So I know this one is a big mover. Man, oh man. I think once again, since you got hit the last few days, let's look at, your daily highs. And your first one that comes into play is 96.82. And then you got a big bump up to 98.82. So kind of open here as far as resistance here goes in Ralph Lauren. And then also, if you were Tommy Technical and you looked at the move from like 82.5 to 103, so let's call that a 21, 22 point move. Half of that is 11. You took about half back if you were the 50% retracement trader that we all want you to be. You would have been looking at this in this area and then getting a nice pop from Atlantic Equities.
JP Morgan downgrading Brinker International, EAT to neutral.
Man, these restaurant stocks, whew, man, have they?
Oh.
Yeah, man, oh man. I'd be a little leery on this one. Just because what has happened to your Mickey D, some of these, Wingstop over. I'm not going to be faded here on this downgrade. And we take 42.78. That was a low from yesterday. I think you get considerable downside after that. It's called $42, your next area of interest. September 12th low was 41.94.
And then Wells Fargo has a massive note this morning out on media stocks. They initiated around 20 media stocks. The most notable calls, they're initiating Spotify and underperform. Lionsgate, LGF, Dennis likes AMC. Lionsgate gets an outperform. iHeartMedia gets an outperform. Fox gets an underperform. CBS underperform. Disney outperform, Viacom underperform, Sirius outperform, so Discovery outperform. So a lot of calls this morning being made by Wells Fargo on the media space. The one that interests me the most is probably the Spotify at underperform. They gave it a $115 price target.
Are you on Spotify?
Yes, I don't pay for it though, but I use it.
I think I have it on my phone too. I don't know. I mean, who's going to be the winner here in this whole streaming wars thing? Content wars. I really don't know.
Probably.
I'm sorry?
Probably Apple.
Okay. Spotify, I mean, you came down to the June lows, trying to rally, but trading red. I would just, for Spotify, I'd keep an eye on 120.05. That was your May 23rd low, and that's been really your low. It's not the yearly low, but keep an eye on 120.05 in that issue.
All right, let's bring on our first guest of the day. Nick Chahine joins us every other Tuesday at 8:35. He is the author of Create Income with Option Spreads and sellspreads.com. Nick, good morning.
Good morning to you.
How are we doing this morning?
Well, he did okay. I'll give him a B. As far as rating these stocks, I was listening to you on Zscaler and Ralph Lauren, and you picked the right levels there.
Hey, all right.
A B? Then why the hell do I get a B?
Because you missed nuances. No, I'm just kidding. No, your important spots are right on. I agreed with everything you said. So the only thing is I wouldn't chase these upsides because onus is on the bull to prove that they can hold it. Right. It's not only important to retake the level, it's important to say I can step on it in order to make higher highs. So the better way to chase it is by selling puts or put spreads. But again, I hate to do that on an up day, but I'd rather do that than buy calls.
Yeah. You could get Nick back on once a week now since he's giving me some compliments here. Nick, I just want to talk to you about this expiration, and I guess I'm the only one that on Wall Street that was kind of I don't want to say disappointed, but you usually get like a little bit more of chop and slop or volatility. The way I'm looking at it is because, we had the Fed low on Wednesday at 80.75, and then they tried to press it there on Friday, and they couldn't get it below that level on Monday. I mean, I don't know if there's a ton of buyers out there, but there certainly doesn't seem to be a ton of sellers. Guy, give us your take on this expiration.
Sure. I think it was wild enough. I noted that open interest was, like you said, should have been wilder. But from the open interest, there was a lot of downside pressure that just disappeared. I don't know where it went. There should have maybe those long tails that we had a few days on a lower time frame in the charts relieved some of the pressure, but there were definitely there should have been more violence. But it unfolded. The price action unfolded okay based on the charts themselves. And as far as making new highs, I would stay long throughout this mess because I think we still have a truce until China has its birthday, whenever that is. And it seems like they don't want to be verbally abusive to each other for at least a couple of weeks. And like you said, if there are no sellers, if we burst through, I think it will be violent. And the 3100s will come a lot quicker than people think. I mean, they're thinking, oh my gosh, you're saying 3100 and 3200. It's just a hair above where we are right now. And the absence of sellers makes it easier to leap because the emotions will get out of the way, the machines will take over, and then the stops will hit, and then all hell will break loose upwards. So I'm holding longs. I sold some puts, and I booked some profits. I'm short a few things that are going wrong, like bonds that were going against me this morning. So there are some things that are not working perfectly, but I think the charts want higher than lower.
So would the chart, would the market lead itself higher, or would it take an actual meaningful catalyst?
I don't think it will take a catalyst, but a catalyst will definitely make it instantaneous. But if we could, like the overnight burst, if we can bounce off the 305-ish, 04, 08 area has been pivotal for a while. I keep seeing it in front of me. And then if we can use it as footing and go above 12, and then that will get us to the 20s. And if we can set a new high, I think there's still a lot of stops. There are too many people that are comfortable short. I hear it in the media. Everybody's so confident that things are going to break down, just like they were confident that Trump wasn't going to get elected. It's almost like the same feeling because he's going to mess things up so badly. And what if he doesn't? What if nothing happens? How can you deny the P&Ls that are unfolding now? So I think once you hit some stops out there, it'll just be buying begets buying. Forget what the fundamentals are. Forget where we should be. I think the easier move is up than down.
Okay, so that's broad market. What about individual sectors here? What's on your radar?
Well, this week is Micron. So
Right.
The semiconductor is probably on my radar. I was long AMD by selling puts at 26. I collected over $1.10, I think, for it. Now it's down to 75 cents. I could get out of this just in case. But if it dips in sympathy to Micron, because Micron has run so far, I would probably resell that same put. And it was November. But that means I want to buy it at 26. So if AMD falls below 26, I have to buy it there.
And that's Micron is what day? Is that tomorrow?
Thursday. So Friday morning will probably be the day they trade that.
Okay. Other earnings plays that you're making this week? There aren't that many. I mean, we have Nike today. So
well, Nike would be one, but I'm not trading it. It's above my pay grade to know what they're going to say, but they seem to be oblivious to what's going on in China in a good way. I'm not being sarcastic about it. It just seems like they are strong enough to say, you know what, we don't care. So we're still our shoes are still selling pretty well, and they're managing whatever effects that China has on them. So the chart has been very active for Nike, and it's kind of in a tight bunch after a long rally. So if you want to be an ABC move up, I guess you would expect that Nike could be a lot higher a week from now. So, but again, this is a binary event and on earnings. So I'd hate to just buy and hope. So if I'm long Nike, I'll probably stay long it. 86 is important to hold. The buyers are in charge as long as they're above that. And then above 89.30 is just open air to 92, 95.
While we're on the industry, let's just talk about Dick's here. A question from Rob Hood in the chat. How do you approach this chart right now in DK?
It's the only gig in town in my neighborhood. And I just don't know how they could fail, except that they could fail. So it's too high for me to chase it here. Dick's has to prove itself around 39 and above. So 39, there was a doji a few days ago. I wonder why on the 13th. That was Friday, right? No, Friday the 13th. Yeah, 2 Fridays ago.
2 weeks ago.
Yeah, so I wonder why. And then I look left and I kind of know why, because it's been the failure from last November, the failure from February and April. And it's not exactly the same point, but it's the same area. So onus is on the bulls to take it over. And the first step would be to go above 39.10, and then obviously to beat that doji top, which is 39.60 something, and then use it as support. So if I'm long, I would trim. That's how I would treat it. And we're probably going to fall back to 36 and change and test it and go from there. If I'm long, that's what I want to happen. I want them to solidify the floors below me so they can attack that doji candle from the 13th and see what happens there.
Another question from the chat. What about Walmart here? Sitting here at all-time highs.
Yeah, too expensive for me. I shop there, and I'm amazed at how they make their numbers. Half my shelves are empty. You can't get any help. I don't know what the hell they're talking about, them investing in people. They're investing in people by firing all the rest of them. You can't get help. The shelves are empty, but the price is great. If you want something and it's at Walmart, you're not going to find it cheaper anywhere else. So I don't want to go long it here just because it just looks too extended. But if the market's rallied, it's going to go with them. It's doing the right stuff with the online stuff. I have bought a lot of online stuff from them. And believe it or not, I bought truck tires for my son, 33-inch tires that I couldn't find anywhere except for like $500 a corner. I bought a whole set for $500. So from Walmart, $489. But it was through them, but somebody else, kind of like an Amazon deal where I clicked buy, but it's somebody else that sold me the tires, not Walmart. So it wasn't their product, but I'm sure they got a cut of it. So they are doing the right thing. It's just too high for me right now.
This might be the first time in history anyone's ever said Walmart is too expensive for them.
No, I didn't say. Oh, the stock. Oh, the stock. Okay. Yeah, things are tough in this household. Walmart's too expensive for me.
It's the irony. It's the irony.
Yeah. That's pretty good.
Yeah. All right. Going through the chat here, another question. What about Lulu here, Nick?
Okay, last thing on Walmart before I go to Lulu, I'd buy it if it goes down to 114 as a trade. Okay, Lulu, I think I just did a video. I'll share the link later here. I have a trigger alert at 195.80 just because it might get interesting there. As long as they're above 188, 189, I think the buyers are in charge. It's some sort of a pivot zone just because they failed at it a couple times and then finally they got above it. So now onus is on them, the buyers, to say, okay, we earned it, so we can set higher base. Just exactly what I just said earlier. It is an expensive stock. It's not for the faint of heart, and it's definitely a trade, and you have to put stops. Maybe 183, 184 would be a place to get out. Depends. That'd be my taste. It seems to have solid support around 178.50 ish. All these comments are short term, so be careful if you're trading or investing. You have to. I had a few conversations I did a few classes the other day, and the common thread was, it almost like the people I talked to, they didn't know why they bought the stock, and they're down 50%, and they're asking me, should I sell? First of all, I can't tell you, but you have to remember why you took the trade, and if that reason is still there, then no, you shouldn't sell, and I wouldn't sell. But if that reason is gone, and why didn't the stops kick in earlier? So taking the trade, define it first. Otherwise, you don't know if you want to defend it.
Have you traded FedEx and UPS at all?
FedEx, it disappointed me a few times, and then I left it because it's a broken company, I think, and they don't know it. So they've been dicking around with Amazon, the competition, not competition, and totally ignoring it, like Macy's, for example. It just, it's cheap. Yeah, it's in a 5-year base of sorts, but I don't know why I would want to go up and bet on it up on a fundamental basis. So it would have to be a trading basis, and I just haven't seen anything that panned out. So on a weekly chart, if it ever gets to 172-ish, it's a moving target, I would short it. Or if I'm long it, that's where I'd exit, because that's where the sellers come in and say sold. So until they go above that, the sellers are definitely in charge, to say the obvious. What was the second one? UPS?
Yep.
So UPS will probably be the exact opposite, because if money goes into that sector, I know they're into transports, but they're not really. They're kind of like their own little niche into transports, I think. And so UPS is obviously, apparently, doing something better. But I don't know the fundamentals on it. I got to check it real quick before I put my foot in my mouth here. So it is 21 PE, kind of like Apple. And 1.5 times sales. So it's not expensive from that perspective, but I see a lot of gaps below and such a big rally. So as long as it's above 117 and change, I'm okay with it. Once it flips below that, then the sellers might be selling the pops versus buying the dips as they have been. So be careful if you're long that to
I got a good one for you here before we let you go. Regeneron. REGN in a long consolidation period. Whew, after a major decline here. I don't know. With these pharmaceuticals, I'm like, what do you got in the pipeline? But what are you looking at here, Nick?
Nothing I want to bet on, because we are going into elections, and the politicians from both sides love to beat on them. I don't know what the problem is with Regeneron. Here's a monthly chart. I needed to go to a monthly chart to see what's below, and I have no idea. So something sticks out at 205 for some reason area. There were 2 big monthly candles. Make sure that these reasons that cause those candles are not gone. All the way on the left on the chart, and it's just barely coming back into the monthly value area, so there's plenty of froth to come out of it depending on what the news is. So I have no idea where. I wouldn't catch this falling knife, let's put it that way.
Just one more comment. Nick and I have our different methods of technical analysis, but he mentioned at the top of the show how we come up with some similar numbers, and he mentioned that 3008 area, and I was keen on that from last week, because there was a period during an expiration where you had 4 out of 5 closes at either at 3008 or 3008.50. So intermediate number, totally agree with that one, Nick. We're leaking now. I'm not sure what the reason is, but that's a good number, Nick. It's not a high, it's not a low, but it's an area of multiple closes.
Cool.
All right, Nick Chahine is the author of Create Income with Option Spreads. Joins us every other Tuesday. Nick, thanks for the time and the charts. Talk to you in a couple of weeks.
All right, looking forward to it.
All right, 8:49 here, Joel. Before we bring on Nate Tobic,
what's going on? Why are we leaking over there? You know?
No, I've been looking, and I don't see any tweets. I don't see any
A little bit of a bond rally. I'm not sure. I mean, they fluffed it up off the open. So now at mid-range did not hold here. 0075 is your pre-market low. I mean, I might try and hold out for the close. I don't think we're really gonna get much negative action here unless we get a tweet or something. But 97 even. Your close, but just kind of a slow drift lower. I don't know. We don't have Triple D today if there's selling balances or not. But we got another guest coming on today.
Yeah, all right. I'm gonna bring him on. Nate Tobik, as I mentioned, he is the author. Oh, he runs CompleteBankData.com, author of the Bank Investor's Handbook, and we're bringing Nate on to talk about this repo madness here. So I didn't think this was gonna last as long as it has, but what do I know? Apparently, this the lack of overnight liquidity in the repo market is sustained, and the Fed has now had to pump. I don't even know the number. I think it's over $100 billion of money into the overnight repo market. So Nate, good morning. Can you first of all, is my description of what's going on accurate?
Yeah. So kind of what to bring everyone up to speed. Basically, what's happened here is. Back in the crisis, we had this situation where there just wasn't enough liquidity in the market for these overnight repos. So what an overnight repo is let's say you're broker, you're doing a bunch of stuff on margin, you're doing trades, and there's an imbalance at the end of the day. So they ended up with more securities or less securities, and so they obviously you need someone to balance that out. So they get an overnight loan. Then their clients go on trading the next day. And this isn't just individual traders. This is banks, investment banks. This is really anyone, kind of the money flows. So you've got these overnight loans. And what happened was back in the crisis, that whole market froze up and the Fed said, that's fine. We'll just kind of nurse it along. So they had been nursing it along for 10 years and kind of pulled away. And the way they nursed it along was they were kind of injecting liquidity into the system, and there's a bunch of excess bank reserves. And so a bank was willing to make an overnight loan because they had extra money. They could pick up a little cash. These overnight loans, it's like a 2% interest rate, and on a one day. So it's not much, but it's kind of a way to put some extra money to work. So what ended up happening was, we had earlier this month, the overnight rates went. I think the median rate was something like 5%. There was some.
I saw as high as 10.
That was So the median was 5, and it went all the way up to 10 on some trades, which basically said that banks were not interested. I mean, I guess there's two things. So the narrative we heard was that it was just an imbalance thing due to taxes. It was a one-time thing. But there's two sides of the trade. So one is people are posting collateral, and was the collateral good enough? And the second is, did banks have enough excess money that they're willing to make these trades for that collateral? Well, the answer was clearly no, because that's why rates shot up. And that tax imbalance thing, seeing how the Fed has stepped in and said, we're going to keep doing this for the next month, that's definitely not true. And then even beyond that, they came out with an announcement that said that they're now going to be doing 14-day repos. So instead of just an overnight where we're posting collateral for just one night on something, there's apparently assets out there that no one wants to lend on for 14 days. So you have to say, I don't know what's being posted, but there are banks who are looking at this stuff and saying, I'm not sure if I'm going to get my money back in 2 weeks. And it's a cause for concern. It's kind of
Nate, I gotta hop in here. I mean, I try and maintain my bullish stance here in the markets, but when you start talking about banks and brokerages having to get money from the Fed to hold overnight positions in the market, that does not sound good to me at all. I mean, in fact, that makes me very, very concerned about the market. Am I overdoing things here a little bit?
No, I don't think so at all. And we don't have the visibility into what these positions are that no one wants to touch. But there's something floating out there that is, it's not the subprime mortgages, but there's something equally as toxic that no one wants to put a finger on. And yeah, it's does whatever that is, does that have the potential to torpedo the rest of the market? I'm not sure.
Do you think it's these IPOs? You look at what Roku's done. You look at the volatility in Beyond Meat. You look at, Chewy. It had an update yesterday. Is it just, you think these banks that underwrote the IPOs for these companies, and now they're standing back saying, I don't want to own this stuff. You think that's it?
I think that's it. I think the other thing is, we've seen this in the market. There's these expectations are so elevated. So we've seen a lot of cases where someone misses earnings by a couple cents, and then the stock drops 15% overnight. And you say, wow, that was crazy. What happened? And it's extremely volatile, and we keep getting these sort of the surprises, right? And if you're thinking about the trade, this repo trade, if you're holding that thing, it's like, I don't know if I want to be holding this stock through earnings, because what if they missed by a couple cents? That collateral is now worth a lot less, and then it all trickles through. So I think that's part of it. I agree. The IPOs, there is a lot of junk that is being pushed into the market, and the brokers backing these things don't seem to have a ton of confidence. They're just kind of pushing it forward, hoping it it's like they're pushing leaky boats into the ocean, hoping that they float far enough away and no one sees who pushed it in. There's a lot of factors. And
could it just be a dollar shortage?
And I think that's what people are hoping. I think the reality is, we've kind of been on this slow drip from the Fed for 10 years, and they finally turned the drip off back in August. And I think we're realizing that maybe things were never quite as healthy as we thought they were, because we had this baseline, they were just pumping money in. And I think that's what's going to happen is, so the Fed is going to go back to, they're just going to keep pouring money in. They're going to, push up bank reserves and try to get things working back to normal. And that could be it. This could just be some sort of a strange bump in the road. Will it come back and bite us at some later date? It might, but it could be years before someone looks back and says this was sort of a warning sign.
Or Nate, like you said earlier, there could be some other asset out there that is traded super, over the counter with no liquidity that we just don't know about. That
I think that's probably so there's a lot of a lot of what's posted. It's bonds, corporate bonds. Look at some of these back to the IPOs. There's a lot of these companies that have done some strange bond financing transactions. You look at WeWork, and a structurally unprofitable company took out a bunch of debt, and now they're going to try and raise equity to float themselves. Who would hold that debt? That's terrible.
Yeah. And full disclosure, I just rewatched Margin Call over the weekend, so I've got that on my mind. But Nate, someone in our chat is asking about the difference between the LIBOR rate and the SOFR rate, if you can enlighten us all.
I'm familiar with it, but I just am not. That's not in my wheelhouse to speak authoritatively on it. Yeah. The idea is with the LIBOR, it was a bunch of banks. They kind of, based on what they were seeing, they all pooled their information and set these rates overnight. And I know the system was gamed, and banks gamed it to their advantage. And so we're trying to move to something else. But that's kind of the high level.
Okay.
Hey, Nate, before we let you go, you were on a few months ago and you had one stock. I can't remember what it was, but you were a little bit worried about it. You were talking about it on the short side. Do you remember what that was?
I don't remember specifically. It might have been my favorite punching bag, Bank OZK.
That would have been my guess. The Bank of the Ozarks. Yeah.
Yeah. So let's see, over the past 6 months, I mean, back in May, we were at 34. Now we're at 27. I think the short story on this is great. There was just another article on, it was one of it may be Bloomberg, where they talked about why the head of their commercial lending abruptly quit, and it turned out that the CEO was strong arming him to try and overcompensation, and this head of lending was driving returns.
Right. Okay.
And the CEO is like, I don't think you should get paid as much. Of course, he's lining his pockets all the way to the bank, pun intended there. But the reality is this thing is, they're a couple banana peels away from a full fall. And I mean, as a trade, this has been great. If you look, so I'll buy puts on this when it starts to get above 30 again. And you could see pretty reliably, it'll take a $5 or so a share dip pretty often, and you could just keep recycling that, especially once the market starts to get volatile. That's a really reliable trade.
One more one for you, and this is a toughie. Let's say Donald Trump called you up today and said that he wants to replace you, take Jerome Powell out of there and put you in there. And he wants to know what you think about the direction of interest rates. Should we continuing to lower rates and follow the path of Europe, or what would you take the job, and what would you do with interest rates?
There's no way I'd take the job. But I think the thing with interest rates is, I think we're kind of walking down a dangerous line, in the sense that the lower we go when times are good and the market's at all times high, we don't have much margin when something goes wrong. And in the past, we've been able to bail ourselves out by lowering rates. And if we just keep driving these things towards zero, there isn't going to be much room to lower them. And I think what's going to happen. So I mean, looking ahead, I see we've got Trump, who is willing to step on the gas as fast and do whatever it takes to keep the markets aloft. And, on the other side for the election, Bernie Sanders and Elizabeth Warren kind of have this, take a dagger to the banks thing. So if one of them does win, there's no bailout. And, there could be a scenario where we've driven rates to zero, one of them wins, we eventually have a crash, and no one's coming in to save the day. And that would be catastrophic. Same could be said if Trump just keeps flooring it for years, and that isn't healthy either. So I think there's a natural level for interest rates. It's probably higher than where it is now. I know what I'm seeing is, a lot of in terms of credit, there's a lot of I don't want to say bad credit, but it's bad ideas looking for credit, if that makes sense. So this is the point in the market where you get the person who's 10 miles outside of town who wants to build a new shopping center, and you think, don't we already have enough shopping centers closer to where everyone lives? And they're looking to finance that thing. Those are the credits that's going to be a problem when we finally have a recession. And there's a lot of those projects out there seeking financing right now. At the same time, though, when I talk to bankers, they're still, 2008 is very fresh in their mind. And so they are very hesitant to lend on those sort of projects. So what we have is we have some OZKs who they don't care. They're happy to lend on that. And then a lot of some of these, the fintechs or the non-bank lenders who it's like, hey, we need to get loan volume up. Securitizations are coming back. They just want volume. They want to get in the game, make their fees. And so they're taking the risk on some of these things. And, so the next crisis won't look like the last one. There's definitely going to be some credit problems. I'm not sure if it's actually in traditional banks. It could be in some of these non-bank lenders. There's a lot of hedge funds, some enormous hedge funds involved in financing some of these things.
One more before we let you go. I know we're running a little overtime here. So if you want to follow this repo madness situation and what's going on with it, and if you feel like it's escalating and having a negative effect on the overall market, what are you watching? I mean, are you watching the Fed funds rate? Are you watching the bonds? Are you watching how banks? If there's one thing that I should put up on my screen here to follow the situation, kind of give you a feeling when you look at the actual number on something, it gives you a feeling which way it's going. What should I have up on my screen?
So I'd look at a couple of things. Fed funds rate, look at the overnight rate, and then here's another. And then the true effect of this is look at the Federal Home Loan Bank, their benchmark rate. So in most cases, that's the rate that a bank is pegging themselves to when they lend, and the Federal Home Loan Bank is then obviously pegging themselves to the cost of their money. And what I've heard from this is, it was actually the day before the Fed cut rates. I was talking to a banker, and I said, this is going to be great. Rates are going to come down. There's going to be some refinancing opportunities. And he said, what's strange is our borrow rate shot through the roof recently, and that was from the Federal Home Loan Bank. And I started to look into this, and that's true. So while the benchmark rate is coming down, the true lending rate is actually floating up, and that's what market watchers are really worried about, is that the Fed has lost control of rates, that rates are starting to go up, and it's going to be costing borrowers more. Yet at the same time, the Fed's trying to push it down. And so, so there's a Federal Home Loan Bank in, I don't remember how many, I think maybe 12 or something. Most of the cities, you could find all their stuff online. Some of them, it's kind of a real time, and you could see the rate history, but I would be watching that.
All right, Nate Tobick with some tremendous insights for us. He is the founder of CompleteBankData.com and the author of the Bank Investor's Handbook. Nate, as always, thanks for your time. We appreciate it, and have a good one.
Thanks for having me on. Have a great day.
All right, we did go a little over, but that is okay for Nate. His insights were exceptional, and I feel smarter for that. So thanks for
Thanks, Nate.
Thanks, Nate, and thank you, Joel, for reaching out to Nate this morning. I want to thank you for listening as well. You can catch our podcast or the replay of the show on any podcast platform or on YouTube. Thanks to our other guest, Nick Chahine, as well. Please remember, all the information from our show is meant to be used as informational purposes only, not for investing advice. Questions, comments, concerns, email us, premarket@benzinga.com. Everyone have a great rest of your day. We'll be back with you with Dennis, we hope, on Wednesday.